Okay, so hello and good morning. I hope you can hear me well. 1 second, I'll just check the chat box. Okay, that wasn't good. 1 second, I just closed it. So usually you should hear me well. So this is Jens Klatt speaking, and I'm exclusively presenting the morning meeting to you today here on Tuesday, the 2nd of May 2017. 1 second, so I have to open the chat box here. Okay, perfect. And now I can see that everything's fine. So as usual, before we start, always very important, since it's possible that we formulate some kind of training setup here, I'll give you here the risk disclaimer. So a short introduction to my person. So my name is Jens Klatt, as already said, and I'm exclusively presenting the morning meetings for you or to you for JFD Brokers. And this is my first event here on FX Street. I'm really happy and I'm real proud to be here and to be able to hold this webinar. So a little or some short overview of the stuff I did in the past. So I'm the former head of research here for Daily FX Germany, Austria, and Switzerland. You may remember that. And while I'm talking here, so let's have a look at the market open in DAX. So for around 5 years, I built the brand Daily FX in Germany, Switzerland, and Austria here for FXCM Germany. You may have heard that Daily FX then was sold to IG Markets for around 40 million. And nevertheless, already before, in July 2016, I decided to found my own little company, and yeah, and have an exclusive deal here for or with JFD Brokers. That has the main reason for this corporation is in fact that JFD Brokers is a broker who has no a market making license, and who stands for so JFD is just fair and direct. That's the short version here for this, the acronym, and so JFD is not taking the opposite side of the trades of the clients, and has an integrity and transparency in its focus here. And that was a vision I shared for a very long time. And so I was always wondering here what the main focus of my company will be, or the main fundament. And I said integrity and transparency. This should be the main thing here. And then you have to look for someone you can exclusively work with together here, and who shares this vision. And JFD Brokers is exactly that. And as already said, so not having a market making license, I think not dealing directly or aggressively against its clients, that perfectly shows that it perfectly underpins the division here. And yeah, so I'm offering educational pieces too. So education in terms of trading coachings, for example, or also a managed account. I'm located, by the way, in Berlin, Germany. So I hope that my English is fine. I'm self-taught here in terms of English, so I haven't had any courses at a university somewhere in Oxford or something. But I'm self-taught here over the years. I started that. The main reason I am quite fluent in English is that usually I'm reading trading books in English. So in Germany, there's lots of literature here, also on the topic of FX trading, for example. One reason there is some literature is because a very big book publisher came to me and asked whether I'm interested in writing a book on FX trading, which I did. That was in 2014. A book was published at the end of 2014. And nevertheless, the main literature, and very good literature you can find, usually you find it in English. And so I had to always read English literature here. So yeah, and then it's not just educational work I'm doing here, but I'm also offering a managed account. So I'm a professional trader and offering managing clients' money here under a licensed umbrella, thanks to JFD. JFD is the broker I'm trading here with. So the broker I do my trading with, and on top of that, obviously I'm doing also research, and that's so let's come to the morning meeting now. That's what we want to focus on here today. So we have a very, very great week ahead of us. So I'm really thankful for having the event today, since the upcoming days are very special, very great. We have several data coming from the US market, and here let's have a look at the 1 second. Where is it? Oh, it's here. I've already prepared it. So it's the economic calendar for today. So today there are two events which are, especially one, let's say, one event which is very interesting for me. It has nothing to do with the US economic data, which is published here. It has something to do with the GBP. So market manufacturing PMI. I'm holding two positions here, and it's getting closer for one of those positions. I'm already slightly in profit here with the stop. Nevertheless, I do not like what we get to see here shortly before the manufacturing PMIs, which are published in around 1.5 hours here, trading so close around my stop. That's not really perfect, but you can see that there's also a second position, one in Euro GBP. I'm holding a short position here. Also here, the developments are not that great. So as you can see, last week on Friday, we closed here around 129.50, and so I was well ahead on both trades. And currently, I'm seeing some of my profits here becoming much smaller. Yeah, it's okay. That's part of the game. That's okay. The main reason I'm holding a long position here, that has something to do, especially in Euro GBP. There you can see here the position. I'm holding it already for around 1.5 months here. And the main reason for that is that there's a big, if you look at the big picture here, Euro GBP, you can see I had shoulder formation. I'm forming, obviously, and so I really appreciated the break here on the downside. It's not just a pure technical trade, but it has also to do with the sentiment. So I mentioned my book here on FX trading, and the main focus on this in this book was the sentiment side here. So what's the positioning of market participants, not just retail traders, but also in the commitment of traders report, and that's one big reason I'm short here, since market is heavily short the GBP. And as you may have seen here, that was on the 18th. It's 2 weeks ago. Okay, so around 2 weeks ago, that was when Theresa May announced the snap election here, and the market is heavily short GBP, and that was kind of game changer, since market participants now see that there's obviously some interesting developments around the Brexit negotiations. And what I'm trying to anticipate here is a reduction of this short positioning. So it's not that market participants going aggressively long GBP, but they're covering their shorts. And this is a good reason, especially if you combine with the current fragile situation around the euro here, and the French election next Sunday. That you say, okay, Euro GBP is probably a very interesting short here. And as you can see, the region around 83 is also very interesting. But now I have to see what I will do with this trade. So I definitely do not want to see here a run and a break above those highs from last week, plus the first round of the French election. If this happens, I definitely have to see whether I'm not taking out the trade here, since right now, also here, my stop is already in profit. And I would imagine that this stop is taken out here the moment we go above those highs from last week. It's around, well, it's 85.30, something like that, and or 85.40. And so I definitely think that then here there's a good chance that I'm getting stopped out on this trade, and so I'll definitely consider taking out the position already here with a little bigger profit. And so as you may have seen, it's definitely the case that I'm making some profit on this trade. Nevertheless, there was nearly double the amount I made so far when markets were trading here in GBP USD respectively. In terms of Euro GBP, when we traded around 84 again. So where is it? 1 second, I have to look it up here, but you can see it. Here's Euro GBP. Okay, right now you might wonder what's the main driver. So we'll talk about the market opening in the DAX, but also about the US dollar data, which is coming in the next days here, especially the NFPs on Friday, but also tomorrow, the Fed. a little later here. So what's currently the main driver? I'd say the main driver seems to be that obviously Macron is gaining some pace again in polls around the French election, the first round here. And so yeah, let's see in which direction it will drive us here the upcoming days. I think this is the main driver. All in all, we have to say that in the upcoming days, different to the US economic calendar here, the Euro economic calendar is really thin, and which is in this case that yeah, that the main driver is definitely the French election. So and here and in terms of the euro, probably tomorrow there's also the eurozone BIP, which could I'm sorry, BIP, this is a German word, by the way, so it's Bruttoinlandsprodukt. It's a great word. In English it's gross domestic product, it's GDP. And yeah, it's tomorrow. This is the only potential driver for volatility here in the euro pairs from the economic side. So, but all in all, usually you'd say that the French election here will give the most of volatility here. So far, we can definitely say there's one small formula for the upcoming days here until Friday. In terms of the euro, it will be if Le Pen gains some momentum here, euro should usually move down and the other way around, so vice versa, which means if Le Pen is losing, as currently obviously happening here, and Macron gaining some pace, well, this means that then euro should usually rise, and this is exactly what's happening here. By the way, I see a question here from the YouTube chat. I will answer this a little later. I usually tend to answer those questions here with a practical example and not just a theoretical approach. The question is, how do I use the 14 ADR? I think the main reason you're asking is because you might have already seen here in euro, sorry, in the DAX, the 5-minute time frame here, that I'm having the 14 ADR here, the average range. That has mainly to do with me placing stops and looking whether it makes sense to place the stop. Let's say at the current highs here. Let's say, well, current highs are here, and we're trading at 12,475 currently. This is around 13 points lower, and the ATR currently here is trading at around 7. So usually I'm working with a multiplier here, meaning that I'm usually saying something between 2 and 3. I'll multiply the current ATR with, and if I now place my stop here above those highs for whatever reason, saying, okay, we're not making it higher, no chance of new all-time highs. We talk a little later about the DAX here more specifically. Then I say, okay, if I now place my stop here, I have to make sure that I understand that I'm currently placing my stop in the current market noise. And this is something where I say, well, probably it makes sense to place the stop a little wider here and make sure that I somehow get this noise filtered out. And now you might say, okay, but this means on the other hand that then we have to make sure that we reduce the position size, and so you're trading smaller. Exactly. So I have to reduce the position size if I'm using a wider stop here. So that's the reason. So I've already answered it. I hope that's fine. If you have any other questions, just shoot them over. So yeah. Back to euro, respectively here, the data currently or today. This is mainly the manufacturing PMI, which is where my main focus is on here in terms of GBP, thanks to my position. Euro is very thin. In terms of the US dollar, we had already some data yesterday, which was okay. Let's say it was retail sales and also the ISM. Usually, that's always a good way to find some information. My Twitter account, you can definitely follow me on Twitter. I try to update the markets really here on real time also. And we had a bank holiday yesterday in Germany, so the day today is quite special in terms of the equity trading here, because here we have the first trading day of the week, and we're currently trading around the all-time highs. And so it's the first trading day of the DAX. Nevertheless, in the DAX this week. Nevertheless, yesterday in the US, there was already some trading, even though it was very thin. And we had some market data here, which was published. In this case, it was the manufacturing PMI, the ISM manufacturing PMI especially, which came in below expectation, still well above 50. This is the number where you see an economy in increasing or are still having some positive momentum, let's call it. Nevertheless, it was the weakest reading here, as you can see. Manufacturing PMI was the lowest reading since September 2016. So soft data and hard data are more and more now converging again, making it somehow more unlikely that the Fed will hike rates. And this is, by the way, the main topic for the next day. So what I will do here, and this is the main focus, it's not just an intraday setup. So usually we have also the DAX long or short here, which is taking place every Monday and every Thursday. It's around 7:20 a.m. GMT. And there I give an overview of the DAX and how to trade the DAX here. So that's something we'll definitely formulate a little later on. I'll give you some insight how to potentially trade the DAX. But here, currently in the morning meetings, I want to give an overview of the markets and how I see the current situation in the markets. So, and today, since this is the first trading day of the week, for me, located in Germany, it means that I'm usually giving an overview here of what I expect the upcoming days, what could be the main drivers and everything. And so this is the reason why I'm today already talking about the Fed tomorrow sitting together and discussing their monetary policy for the upcoming months here again. I have to be honest here. I do not expect any surprises from the Fed tomorrow. I do not expect them to announce anything in terms of, well, we have to see whether we'll probably hike rates in June or something. I've already prepared here the Fed Watch tool. So this is from the CME, Chicago Mercantile Exchange. Currently, as you can see here, you can select the data. And if you here click at the 3rd of May, for example, well, obviously you can see, okay, currently 95% of market participants, so 95 out of 100, do not expect the Fed to move tomorrow. And this is, by the way, something I do not expect, but it's not just that I don't expect them to move tomorrow, but I expect them also to reformulate the status quo and say, okay, we definitely still depend on the economic data. And it's not just that we depend on it, but we do not want to hike rates another 25 basis points here at the next meeting in June. I do not expect them to formulate it in such an aggressive way, but, and this is exactly the thing here, currently the market is expecting a little over 70% of such a step at the next meeting. So they expect the Fed to hike rates of 25 basis points, which means currently the US dollar has priced such a step in. And nevertheless, now let's see here how the US dollar is performing. Currently, the US dollar, the US dollar is performing, well, can we call it subdued? So as you can see here, we've seen after the Trump trade developed here, higher highs, higher lows. That was, by the way, a structure which already developed well before that event. And now the market is topping out here at the beginning of the year. And now, yeah, the US dollar is losing some momentum here. And now the thing is, the main question is, why does this happen? I mean, did the Fed change so much? I think they did in March already. But I think also the rhetoric from the Trump administration around the US dollar plays a very important role here. So you may have heard that, for example, Trump during the election here was very skeptical about the loose monetary policy of the Fed. Well, criticized Janet Yellen for having such low rates and everything. And then around, I don't know, 3-4 weeks ago, there was an interview. I'm not sure if it was the Washington Post or it was the New York Times. Not sure. Doesn't matter. Nevertheless, he said during such an interview, well, I do not have a problem with loose monetary policy. I don't have a problem with rates still being so low or something. That was really surprising and shows that the Trump administration obviously is interested in a weak US dollar, which, by the way, makes sense. If you plan to make America great again, well, you should expect the Trump administration to really favor a low and weak US dollar here. And that's something where I think the Fed also comes into play. And even though you say, well, they do not have any, or that they are not dependent on politics here, they are some kind of independent, well, I think they are not So which means they hear what the Trump administration is saying, and this is something they will try to somehow formulate tomorrow. You have to read between the lines, definitely, but nevertheless, I expect the Fed to really step back here and re-announce the status quo, and yeah, so that way making sure that the US dollar does not strengthen too much here. And that's one of the reasons why I expect the US dollar to weaken the upcoming days. So it could definitely be that one other driver for the euro higher is not just Le Pen here losing some of its momentum, but also that the US dollar weakens here, and this combination then results in an attack and also a break of the region here around 0950 around. That was the region around the highs last week. We break above this level and push then towards 110. On top of that, you might, well, definitely you will think, okay, and now also here the position in GBP USD makes sense. Then I mean, he definitely hopes not to get stopped out here. Was really close, by the way, was really close. But I definitely hope to not getting stopped out here, since if I expect the US dollar to weaken, I definitely want to see where I definitely want to be still long GBP here, right? And the moment the US dollar weakens here, there's a good chance that this current sentiment extreme is then reduced here, and here that the market participants are covering their shorts. By the way, so you might wonder, how do I know that? I mean, you can look it up at the website of the CFTC, cftc.gov. It's and there you have the possibility to see how market is positioned. I've already prepared a chart here from a website. This is for free. You can look it up here, timingcharts.com, and there you can see here the future in this kind in this moment here, the British pound future, and here seeing the net position of the big speculators here, and seeing that market is still short 91,000 contracts, which was, by the way, really surprising. If you remember this squeeze here on the upside, which pushed us higher and above 129 in one day. So market was stabilizing at a quite high and elevated level, and as you can see here, so obviously that was the squeeze that was on the 18th of April, and then market was stabilizing here, pushing higher last week in a very thin market environment there too. That was one of the reasons. So I traded the break long here. So I was short Euro GBP, what wasn't long in GBP USD till last week, and then on I'm not sure, was Wednesday, was Tuesday, not sure. I think it was Wednesday. When I went long here, when the market pushed above 28.50, and yeah, so built some momentum, pushed me higher, resulted in me putting the stop at break even, and now putting the stop at the lows here from last Tuesday. Sorry, not Tuesday, Thursday. Main reason for that is I have to pay for the trade. As you can see, there's a negative swap. And so I want to make sure that I'm definitely having my stop at break even here, not losing anything anymore. After the market moved quite good in my direction here and pushing nearly 100 pips in my direction, and yeah, so right now this is the main driver. I've already spoken about the sentiment extreme. That was I'm not sure. Can we go back here 10 years or something? Let's see what happens. I think it takes some time. Okay, that's, well, it's not so bad. Okay, so okay, so no, that's not possible. So probably you have to pay for that. So the thing is, or it's the current contract probably has something to do with that. Those future contracts expire. It's not the spot market, but it's the future market. However, as you can see, it's very aggressive here. If you go back around 1 year, you can see that's definitely by far the most aggressive short position post the Brexit here. And also the flash crash we've seen here in 1 year. And if you have some data available, I have them, but not here. You can also see that this is by far the most aggressive short position ever in GBP USD, pound sterling. And so that's usually the time when such a sentiment extreme is reduced here rather sooner than later, and then resulting in a huge push in this in this kind of market in a different direction. So no, let's come back to the Fed, and then let's come back to the US dollar here. So Fed tomorrow, I do not expect to move. Let's sum this up. So why will the Fed don't announce anything? I think the main reason is the U.S. President Donald Trump. He needs a weak U.S. dollar, and so the Fed somehow can't afford to be even more hawkish than she already is compared to its G10 currency counterparts. So we have always to remember that the Fed currently is in a very, very tough spot here compared to the GBP. I mean, for example, Bank of England, but also the Bank of Japan, but also the ECB or the RBNZ or the RBA. I mean, they're a very, very tough spot here, since all those central banks are interested in weakening their currency. And so now you have to somehow hike rates. But if you hike rates, you make it more attractive for market participants to buy this currency and sell others, which is then resulting in this case especially the US dollar index pushing higher from May 2016 onwards. And we're trading still at quite elevated levels here, but pushed significantly above 100 here post the election of Donald Trump. If you want to make America great again, and that's something where you say, okay, I want to produce products in the US and then export them, you need a weak currency. That's simple economic theory. And on top of that, yeah, we've also to say, even though if the Fed is interested in hiking rates here, you have to, we have to look up all those numbers. And then now we have the NFPs on tap. We have tomorrow not just the Fed, but also the non-manufacturing ISM with the ISM employment component. We have the ADP data set. Then the NFPs on Friday. All those numbers, especially ISM employment, ADP, they will give very good indication of what to expect from the NFPs here on Friday, even though I don't expect it the markets to move that aggressively here. And yeah, so the thing is that the last data, especially around the NFPs, has shown that there was below, right? It was below 100,000, I think. I do not know, but I think so. And this means that the current situation here is not that strong in the US, or respectively the US economy is not that strong, meaning that somehow the Fed also wants to avoid to tighten their monetary policy too much here to make sure that they do not risk drop back into recession, for example. Also, I mean, we've definitely to make sure that we understand we are in the current we are living in times where the upswing in the economy is already now taking, I don't know how long, 8 years, I think so, right? Yeah, 2009, 2010, after the financial crisis here, the global financial crisis. So, and so there's rather sooner than later the high chance that we drop back into recession here, and I think they definitely have this in mind. And so if we combine the current approach of the Trump administration and also the still somehow sluggish economic growth in the US, well, we have to say there is no real room for being too hawkish here. And this means that here somehow we shouldn't expect too much from the US dollar. I think there's a higher chance in the US dollar to move down and attack the level around 98.50 than to move back up to 100 and move significantly above this level. And yeah, so in this context here, we have the sentiment extreme in the GBP, as already mentioned, but we have also the French elections around the corner. We have the geopolitical tensions, by the way, in Japan. So we can also look up here the US dollar, Japanese yen. The dollar yen, by the way, is now pushing back above 112. This is a strong signal here. So if we are capable of closing above this level here, I think there's a good chance that dollar yen might push higher. This is even more interesting since you usually would expect, if the US dollar is now definitely weakening as I expect it to weaken. I'm not saying it will weaken, but if it weakens as I expected, well, I'd say, well, probably dollar Japanese yen in this context is probably a good short here. Not currently. So I have to say that the geopolitical tensions here around North Korea and the situation over there in Asia, all in all, with Japan being some of the nearest neighbors, let's call it, to North Korea, with all those tensions building, don't really expect much capital to flow into Japan, even though, well, if there's some kind of risk-off move in the equity markets, usually you see in market participants unwinding carry trades, and so you usually see a natural inflow in the Japanese yen here, since they usually finance such carry trades with a weak currency, which is the Japanese yen, or not just a weak currency, but also a cheap currency here. But here, probably the Swiss franc has some outperformance potential, and it's not definitely, market participants do not really necessarily favor Japanese yen here when unwinding those carry trades, respectively, preparing themselves for some kind of risk aversion in the markets. And also here, the uncertainty around the French election. So I still think that Macron will make it. I don't really expect Le Pen to have any kind of chance here during this election next Sunday. Nevertheless, if I have to choose here, I definitely choose GBP over euro with the uncertainty around the French election and Japanese yen if I want to short the US dollar. That's what I just want to say. So yeah, that's around the currency markets. Now let's have a look here at the DAX. That's one of my favorite markets, even though I haven't traded the DAX during the last weeks and months very aggressively. That's one main reason I have definitely trouble with this market environment. So it's very choppy. As you can see here, after the huge push after the French election, markets started to stabilize here in a very, very tight range between 11,400 and 12,400 and 12,500 points, and not moving out of this range here. Also here, even though there was a push in the morning up to those highs here, obviously market doesn't want to make it above those highs. So we're still trading in this range, and I have definitely some trouble to trade those ranges. So usually I try, especially in case of the DAX, to anticipate breaks here on an intraday basis of various important levels, and then and want to see an intraday trend developing here. And that's usually the way I'm done here and formulate trading setups here with the open range. So based on the open range, I have a discretionary approach here. I'll trade the open range. By the way, that will be some topic here for the next week. That will be on Wednesday, the 10th of May 2017. Then I'll hold a webinar here around the US market opening. So I'm trading the US market opening here in the Dow Jones or S&P or NASDAQ the same way I trade the DAX. So that does not differ here. It's the same approach when entering the trades, even though you sometimes have to adapt in terms of the management of the trades. Now let's get back to the DAX. So usually I trade the open range here. I hope to develop such that such breaks develop. The problem is we have many fake outs here during the last weeks and months. That's making it very difficult for me to trade the DAX here with my approach. And if we see moves like this, such brutal moves, sometimes they are coming with a big surprise, and you have definitely trouble to capitalize on them. See, since you have your approach, you try to position yourself during a time frame between 8 and 9 a.m., 9:15 a.m. German time. So it's around 6 to 7:15 a.m. GMT every day. That's the phase around the market opening. So the future DAX opens already at 8 a.m. German time, so 6 a.m. GMT. And then you have the Xetra, so the spot market opening here at 1 hour later. So it's 9 a.m. German time, so 7 a.m. GMT. And that's usually the time frame when, and this is where we have now the 5-minute time frame here. By the way, this doesn't work, which is a real pity. 1 second. That's not really good. So usually you have to place it here. You have to place it here. I'll give it a try. 1 second. I'll try to reopen it. Hopefully it works. Sometimes I have this trouble here in this software. I don't know. That's one big platform here in Germany, by the way. It's Guidance. It's called Guidance. And JFD also has a cooperation with Guidance, so you can trade out of the charts here. No, doesn't work. Okay. So usually you have to place here the open range around 12,487, and then you have the low here. So usually I work with the time frame. Let's do it here. DAX open range. So I usually do it between 6 a.m. till 8:05. I'm sorry, 8:05 a.m. GMT. Wait, that's not right. And oh, so here's a G missing. Okay, and so in this case, so right now we have it between 12,457, and here we have to take this high here at this candle. So it's 12,488. So 457, 488, 12, 457, 488. So it's 31 points. And then usually what I do is the following. I look at the overall advantage. So you try to capitalize on an advantage here. And this is now obviously something which is really difficult. Try to find an advantage here in such a consolidation area. Now you might say, well, obviously, well, probably makes sense to then take a look at the or zoom out of the chart and see a structure, especially here after this push higher of higher highs and higher lows. So obviously the advantage is on the long side. That's definitely right. Now, but the problem is the following: the market is somehow losing of its momentum here on the upside. So if you look, for example, at the DAX here, you can see that the market is currently building some divergence here. So and which means it's definitely losing some of its momentum on the upside. So it's a very tight range here. Even though I have to say I'm not really confident in trading it from the long side right now. I consider it really difficult. But now the different thing, or the other thing is, well, do you really want to short it here, since what you need is a trigger? And right now there are so many trigger events which are not bringing the markets down, that you have to say, okay, probably it's also not a very good idea to trade the short side here. And this is exactly what I was talking about, what I was referring to when I said it's so difficult right now for me to really formulate a good setup here. And so right now, market is yeah, trading in such a tight range, and usually you would say you can somehow trade with a make or break approach here. Or no, not a make or break approach. You could work with the so-called one cancels the other approach, meaning that you're saying, okay, I'm going long once the market breaks you on the upside, and I'm going short once the market breaks on the downside out of this range. So obviously it broke here on the downside, and now what you need to do is you need to find out. I'm just showing you what I'm talking about. So it would be entry long once be it that way. So OCO, it's one cancels the other. That's, by the way, it's special. For me, it's special. If you're listening to me, so usually I'm working with a clear setup, so one side. So I decide whether going long or short, and then I take the long or short side here. If I'm formulating an OCO setup, which is not happening that much or that often, it really shows that I have no real clue right now where the current advantage is and what to make out of the price action. So so somehow it's really special. And I have to say, even though I'm a little skeptical around the long side, if you put a gun to my head and say, okay, long or short, I favor the long side. I have to say I favor the long side. That's one main reason for that is I already mentioned it during the introduction. So one thing, that's 31 points here. It's the risk. So target on the upside. It's difficult, since if we make it above those highs here and push higher, well, we're making new all-time highs, and that's the thing. So the market right now has some potential for some more points on the upside, probably 100, probably 200, not sure how long and how far such a squeeze would go. But the thing is, I think that currently the market environment is definitely good for another squeeze on the upside, since probably some market participants don't really expect the market to push higher from here. Why I'm saying that? Well, we have a very great tool here in Germany. It's also based on sentiment. It's the UVEX. It's one of the biggest, if not the biggest, exchange here on retail products, leveraged retail products here. And 1 second, you have to scroll down a little. You can find here the UVEX sentiment. And so usually it works as kind of classic intraday, not intraday, but anti-cyclical or contra indicator here. And as you can see, market is currently still net short the market. That favors the long side. It's on a 1 month time frame here. Also here, net short. Being net short favors the long side. So and that's one thing where you say, okay, probably we should definitely watch for long engagements here. And if such a squeeze happens, I'd say I've definitely have a chance of 100 points on the upside, up to 12,600 points. Main reason why 600 is I'm usually if we are trading around all-time highs and we haven't traded in the current region before, or also all-time lows, depends on which side. Well, in this case, it's usually the market is looking for psychological levels on the upside here, which is then coming into play in 100 steps here. So the next round number, and this in this case is 12,600 points, above 12,500. So the target or the chance in this case for the risk reward ratio, well, we call it the chance, or let's call it the reward. In this case, it's 112 points. And as you can see here, I definitely think that it's fair to say the risk reward ratio, the RRR, in this case is 31, the risk to 112. And if you know, you can see that in this case, it's 1 to 3. So it's definitely very attractive to look for such a long engagement here. I definitely have trouble to formulate a short setup. So if you now say, by the way, it's already done. So we don't need to discuss this anymore, since we broke out of the open range already on the downside here. But now, if I had formulated this around half an hour to 45 minutes earlier, we definitely had some trouble on the downside here to formulate a target which we should look for. So probably 12,400 points. Probably we should work with a level here around 12,435 points. That's the close from last Friday. So it's usually working very well. So the market tends to retest this region here. In both cases, if we're working with a stop here, this is the scenario. As you can see, we are shorting the low of the open range, and then we're having the stop above the open range. It's in this case 31 points on the other way. Points, and then the target, let's say, lies around 12,400. Even though probably it makes more sense if you're formulating an intraday setup here and without a trigger around the corner, that we probably should work with a more conservative target, which lies around this blue line, the close from Friday. Probably makes more sense. Let's do that. 435. Well, what you can see here in this case is that then you have, how much is it? It's just 22 points, right? That's really unfortunate. That's just 22 points. So we do not need to do anything here, but see that the risk reward is bigger 1-to-1, meaning that it's not even as close as attractive as the long side. So if you have to formulate a trading setup, I already say, well, look for a trading setup which gives you a risk reward of 1-to-2, at least 1-to-2 here. In this case, the short setup is not even as close as attractive as the long side. So probably it's not even necessary to formulate an OCO setup, even though we've broke out of the open range here on the downside. and we have to adapt the setup a little. So we can't place the stop anymore here since it doesn't make sense. But if we now break out on the upside and place a stop here below an important level, we should use the daily lows. In this case, 444. 440, I'm sorry, 440, meaning that we then have a risk of 48 points. Nevertheless, we have a target which is well above 100 points, making the risk reward still well above 1 to 2. And yeah, so that's a short idea of how you can trade the market open here. As already said, so the main focus in this webinar was to give an overview of the main events of the upcoming days, which is the Fed tomorrow, probably the NFPs on Friday. So the US data is very, very important. In terms of the DAX, usually we have the DAX long or short, so you can definitely tune in here if you're interested. Just join me at what is it? It's yeah, around 7:20 a.m. GMT every Monday and every Thursday in the YouTube channel of JFD, respectively. Probably even better to get a better overview here. Tune in next week. There will be the next webinar here on FX Street with the live market opening of the US markets, but the approach is very, very similar to what I trade the DAX or how I trade the DAX. And yeah, so right now I see that it's 7:45, so 45 minutes are already recorded here. And so that's it from my end. I hope you enjoyed this event. And if you have any feedback, just shoot me a mail. I definitely look forward to it. Yeah, as already said, I hope you enjoyed this show. And so far, happy trading. Have a nice day. Watch your stops, and talk to you again then next week on Wednesday. And yeah, so that's it. See you there, and bye-bye.